Commissioner Killeen. Commissioner Dobb.
Here.
Commissioner Clark Coleman.
Here.
Commissioner Kniezek. Chair Basham.
Here.
You have a quorum present.
Next item.
B, Chair's remarks.
Oh, I'd like to, first of all, welcome our staff, auditors, external auditors, and they will make a recommendation and we will talk about it after they've made the recommendation. So this time I'll introduce the
Did you want to approve the minutes?
oh, I'm sorry. Can we get a motion to approve the minutes?
Please vote on your tablets. Item 1, under new business. Forwarding a letter from Plant & Moran PLLC, the county's independent external auditor, providing a required communication to the Commission, Committee on Audit, and the county executive on the results of its audit of the county's September 30, 2022 financial statements and related annual comprehensive financial report.
Let me do that again. I'd like to welcome the Auditor General, her staff, and her guest, and Ms. Cora, please proceed.
Marcy Cora, Auditor General.
Mindy Hayner, Audit Manager.
And if our representatives from Plant Moran could introduce themselves.
Dave Helisek, Plant Moran.
Nikki Acho, Plant Moran.
What you have before you today, this is the results of the fiscal year September 30th, 2022 audit, also known as the annual comprehensive financial report. What we're recommending is that we take the item number 1 along with the presentation together. What we're going to have today is Plant Moran is going to do their presentation on the results of the audit. And then at our next meeting, we will have the auditees from the findings from the audit. They will come and address whatever corrective action they have to address those findings. So if any questions regarding corrective action, if we could hold them until the next meeting when the auditees are actually here. This is just for Plant Moran to give the results.
And so for my colleagues, if they could hold basically major comments until next meeting, and we're going to dig down into this next meeting. So thank you. Please proceed.
Thank you, Auditor General Cora. Again, my name is Dave Helisek, audit partner with Plant Moran, and we are happy to present the results of both the financial statement audit and the single audit for Wayne County for the year ended September 30th of 2022. The majority of our presentation today, as has been in the past, will be through the PowerPoint presentation that was provided to the audit committee, and it'll be projected over the screens there. We will reference at points the single audit report. The single audit report does contain our findings, and that is a substantial part of our presentation this morning. As far as the audit itself, the audit began as it has in the past in the months. It actually had begun some of the interim work back last summer, but the majority of our work and planning would be done in the September-October time period, finalizing really in the months of January, February, and March. Yeah, I am happy to say that that this year, and we'll cover in one of the slides, but the audit was filed within the 180 days as required by Public Act 2 of 1968. So the county did comply with the filing requirements with the state of Michigan. As far as the deliverables are concerned, and you know, there was multiple deliverables. The audit report on the act for the financial statement was dated March 17th of 2023. So as I alluded to, you know, that is at the completion of field work where we've obtained enough evidence to date our opinion. It was an unmodified opinion. which is the highest level of assurance that we can give a set of financial statements. What that means is those statements as presented fairly reflect the financial position of the county as of September 30th of 2022, and the changes in that financial position are the revenues, the expenditures, multiple statements of cash flows, and the notes that were included within that document. The opinion letter did include an emphasis of matter paragraph. In the county's case, this emphasis of matter related to the proper and complete implementation of GASB 87. We had talked about that for some time, but it was a significant undertaking by the county with our assistance to implement what we refer to as the lease standard and the recording of relationships where the county's involved in as either a lessor or a lessee. So again, an unmodified opinion. In addition, we have a letter to the Wayne County Audit Committee and the county executive that's dated March 17, 2023. That's a required communication to those charged with governance. Tyler's going to cover that in a little bit, but you may recall prior to the start of the audit, we would have had a communication that talked about what our plan, scope, and timing of the audit was, how we were going to address the riskier areas, and gave the audit committee as well as members of the commission the ability to contact myself or any member of our team if they had any concerns or wanted any specific areas looked in as the audit was being completed. The single audit report dated March 17, 2023, when an entity expends over $750,000 of federal expenditures in any given year, there is a requirement to have federal programs or single audit completed. This will be a part of our presentation from one of our team members, but this morning, but we do have two reports, one on internal control and one on the major programs that were tested. Just as a reminder on the internal control letter, we complete a financial statement in a single audit. We don't complete or opine on an internal control audit. That being said, we do the testing of the internal control systems to ensure as they are set up that they will be able to provide information so that we can complete our audit on a timely basis. If we come across instances where we see there may be deficiencies in the system, the internal control system, even though we don't give an opinion on internal control, we do identify and report those to both management and this audit committee. The single audit report also, I think we're one more page there, Tyler. There we go. Oh, yeah, there we go. The single audit report also include the schedule of expenditures of federal awards. So that's a listing of all federal programs, whether tested or not, that the county expended during the year. There's a note of the schedule of expenditures and awards, and then a schedule of findings, which will in question costs. It's included in the single audit report, but it includes both financial statement and single audit findings, and that we will be covering in some detail this morning. So those are the two largest deliverables that we provide the county. In addition to that, there's 3 separately issued financial statements. The Wayne County Land Bank Corporation has a separate direct opinion. So we do a separate audit on the land bank. We offered a direct opinion. We were able to give an unmodified opinion on that statement as well. And then that information is included in the county's financial statement audit as well, because it's a component unit of the county. In addition, the county also issues a building authority statement and a sewage disposal system statement. Those are really in relationship opinions. And what that means is the information that's included as part of the larger audit. So both of these entities are included within the audit. We kind of peel those out and issue separate statements, separate notes, so that those are essentially standing alone, and that information is provided without having to necessarily dig through the entire financial statement to get the information on both of those entities. On the next page, so again, I talked about the act for it is done in accordance with generally accepted governmental auditing standards. It's the standards that we live by and really direct us on how to approach the audit for the county. Our job is to express an opinion on the fairness of this statement. So keep in mind that the financial statements themselves, although we give some direction on it, really are the responsibility of the county, and we provide an opinion on those statements. We're required under the standards to obtain sufficient competent evidential matter to provide a reasonable basis of forming our opinion, which we did. That would, however, include keeping in mind the economic limits, the reasonableness of time, and the reasonableness of cost. So we do not audit every transaction the county enters into for a year, but we do enough to give us reasonable but not absolute assurance that the financial statements do fairly reflect the activity of the county and the financial position as of September 30th of 2022. Turn it over to Tyler to cover the next.
Now? Oh, perfect. So as Dave mentioned, I will be covering the end of audit communications. So really the next handful of slides are going to basically be a summary of the key points from that end of audit communications. And really the purpose of this communication is to close the loop on what we would have previously communicated in terms of planning and timing and the scope of our audits, as well as items that we identified and then other required disclosures. So on the next slide here, as Dave mentioned, we do have, if we could skip one more. So on this slide, as Dave mentioned, there was a new accounting standard this year relative to GASB statement number 87, which was adopting a new lease standard. I do want to draw your attention to the emphasis of matter paragraph. Really, the purpose of this paragraph is to draw the reader's attention to this new standard, given how significant it was and the impact on the financial statements. As part of adopting this new standard, there were some presentation changes to both the balance sheet as well as the statement of net position and some associated footnote disclosures relative to this new standard as well. On the next slide, we've got qualitative aspects of accounting. So we are required to let you know that we did not know any transactions entered into by the county for which there's a lack of either authoritative guidance or consensus. And there are also no significant transactions that would be recognized in the financial statements in a different period from which they actually occurred. On the next slide, we have management judgments and accounting estimates. So the 4 items on this slide would really represent the significant estimates that management makes that we would have reviewed during our audit procedures. So as part of this, we did determine that management's approach and assumptions used for these estimates were reasonable relative to the overall financial statements as a whole. And we're required to disclose those on this slide. These would be fairly similar to what you would have noticed last year. And they are mainly consisted of self-insurance for workers' comp, health benefits, other claims, as well as pension and OPEB liabilities, and then calculations of estimated refunds and chargebacks related to property tax appeals. On the next slide, we are required to indicate if we had any difficulties encountered during our audit, and we are pleased to announce that we did not have any significant difficulties that were required to report. Relative to disagreements with management, again, we are pleased to report that we did not have any significant disagreements with management during the course of our audit. Next slide, we will get into in more detail as we go through the reported findings. However, this slide does indicate we had both corrected and uncorrected misstatements. There were misstatements identified during the course of our audit that if they were not identified, there would be a material misstatement to the financial statements. So that's with the first paragraph there. And then the second paragraph would indicate that there were also adjustments identified that were neither materially significant, either individually or in the aggregate. And so therefore, management concluded to pass on reporting these adjustments to the financial statements. And because they were not material, we did not disagree with this position. On the next slide, we are required to let you know that as part of our audit, we do receive a letter representing management's representations to us. And we did receive that letter, and it was filed, or it was dated March 17th, 2023. Relative to management consultations with other independent accountants, to our knowledge, there were no such consultations this year. And with that, I will turn it over to Nikki to explain some differences in control deficiencies.
Tyler. The next few slides are just to give an overview of the different types of findings we could have as a result of our audit procedures. A control deficiency exists when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect misstatements on a timely basis. On the next slide, you can have a significant deficiency, which is a combination of deficiencies or a deficiency in internal control that is more severe than a control deficiency, less severe than a material weakness, but it is important enough to bring to the attention of those charged with governance. Then on the next slide, a material weakness is a deficiency or a combination of deficiencies in internal control where there's a reasonable possibility that a material misstatement of the entity's financial statements would not be prevented or detected on a timely basis.
So thanks, Nikki and Tyler. So our next part of the presentation is really to go through the individual findings as presented. So we had 14 findings for the fiscal year 2022 audit. 10 of them were financial statement audit findings. 8 would have rose to the level of material weakness. 2 would have been significant deficiencies, and the easiest way to really kind of define the 2 or differentiate between the 2 is the 8 that would be deemed as material weaknesses, if not corrected, could have had a material impact and materially misstated the financial, or had the potential of materially misstating the financial statement. In addition to that, there's 4 federal program audit findings that are going to be covered. There are corrective plans as we go through each of these that have been written to address the findings. So when we go through each of these, I would say all but the last paragraph was written by Plant Moran. The last paragraph or last section of each finding will be in bold view of responsible officials, and that would have been the response for the department that would be represented by the finding that was indicated. So the setup's really the same, but just as we go through here, because we're really going to focus now on the findings themselves, but that's how it's presented. Nikki alluded to the control deficiencies. So you'll see those are not listed there. So the control deficiencies would be items that we would have identified that would not have had a significant impact on the presentation of the reporting and the recording of the financial information, but we could still communicate that more as the best practices related to those findings and should be taken into consideration when we report that both to the Auditor General. We have communication both with the Auditor General and the Director of Management and Budget in those instances.
So with that, we will transition over to the other document, the PDF, that is the schedule of finding and question costs, and will be on page 15 of the document.
Pull it down closer
Bring
to
it down and lean forward.
Okay. So with that, we are going to switch it over to the other PDF document to discuss each of the findings. So for the most part, we will be covering the conditions and then providing some of the background on the findings. So relative to the first finding, this would be a repeat finding from prior years. And essentially what this finding represents is that the county's general ledger and underlying financial records were not reconciled and closed in a timely manner. And as a result, there were numerous adjustments that should have been identified by management, but were instead identified during the course of the audit of both the county and the component units. The effect of this lack of controls here is that if the county had not recorded some of the auditor identified entries, the financial statements would have been materially misstated. This finding also includes, as I mentioned previously, some immaterial adjustments that the county concluded not to record, given that they were immaterial both individually and in aggregate. For the next finding,
Says on, so you'll notice in each of these finding points, you might see some of them a repeat finding. So it's exactly what it says it is. This would have been included in last year's finding listing as well. I think the one thing to keep in mind, especially as we're talking about both past and corrected entries and their impact on the statements, is I would say it wouldn't be unusual to see for any local unit of government some sort of comment on adjustments. I think the communication here is to understand, what the underlying issue was that resulted in the lack of these entries. Adjust and account for those next year, so we don't have to report at least the same type of entries. Entries are most likely going to happen. I think the focus, if we can focus on not having recurring specific entries, that would be a step in the right direction.
Yeah, and I think the administrations here are represented from them, and they fully intend on working with us to make sure that we don't have all these repeat findings next year. I appreciate that. Thank you.
great, thank you. So on the next finding here, on the next page, one more page, please. That up, this finding would also be a repeat finding, and it is closely related to finding number 1. And as finding 1 relates to the identification of the entries during the audit, this finding here would represent the overall lack of monitoring controls. So the county did lack appropriate overall monitoring of account balances during the year in order to compile, complete, and accurate financial reports. And as a result of this, there were auditor identified entries or proposed entries. So our recommendation would be that the county develop some overall monitoring procedures to aid in making sure that all of the activities in the funds are complete, accurate, and logical. Likely this would include assigning individuals to specific general ledger balances and funds, and then having several individuals from a high level taking ownership and monitoring the overall financial statements and the general ledger as a whole to ensure that no other adjustments are identified. Next page here, we have finding number 3. And so this finding would be another repeat finding, but you'll notice at the top section, the finding type is both a material weakness and a material non-compliance. And so what that represents is there are 2 specific laws and regulations identified for which we identified non-compliance. And this would be, the first one would be the Uniform Unclaimed Property Act, or Public Act 29 of 1995. As well as Public Act 2 of 1968, and this would be commonly referred to as the Uniform Budget Act. So relative to these 2 laws and regulations, the county we noted during the audit that the county had checks outstanding relative to road construction performance deposits and some other liabilities that would actually be considered abandoned under Public Act 29. But these have not yet been escheated to the state. The next item were expenditures that exceeded budget amounts, and that would be within the general fund, the roads fund, the COVID-19 fund, and multiple non-major governmental funds. Next, the county's original and amended budgets for the victim witness fund and the original budget for the law enforcement fund actually would have resulted approved budget actually would have resulted in a projected fund deficit. And so that would not be in compliance with the Uniform Budget Act. And finally, there was no budget prepared and approved by the building authority for the special revenue fund. With that, I will turn it over to Nikki to cover finding number 4.
Finding 4, this is a repeat finding related to the two-step process in place between the Wayne County Treasurer's Office and Management and Budget to reconcile Gen Pool cash. I do want to say that we've seen significant improvement over the past few years in the preparation of this reconciliation, but there are still issues we identified with the timeliness of the reconciliation and the validity of the reconciling items. So our recommendation is that the process between the Treasurer's Office and MMB continue to be improved to ensure that the reconciliations are prepared and reviewed accurately and timely. Finding 5, this is also a repeat finding. It's related to the inmate property cash accounts. The cash in the inmate property bank account is not reconciled during the year to the cash balances in the jail management system. There is $1.9 million per the bank, but the jail management system only supports $816,000 as to who that money is owed to at the end of the year. Our recommendation is that a process be implemented to ensure that these two balances are reconciled and that the cash balances be reviewed for possible escheatment to the state if necessary. Tyler's going to cover the next 2.
Vicky. So for finding number 6, this would also be a repeat finding, and this relates to the cash receipts fund. So the county did not have adequate procedures in place to ensure that some balances within the cash receipts fund were actually properly reconciled at year end. So essentially this fund represents both all of the deposits relative to multiple different funds of the county into this specific fund. They're specifically identified and then transferred out. This fund also represents a lot of the cash payments as part of the AP process. So without adequate reconciliations in place, the county's year-end balances, the county could fail to identify errors or any misappropriations in a timely manner. So we would recommend that the county develop a process to ensure that the balances within this fund are reconciled timely and accurately. So we did notice that there were additional efforts to clean up this fund, but we would still recommend that some improvements be put in place in order to substantiate all balances and perform reconciliations on all account balances within this fund. The next finding number 7, again, this is a repeat finding from last year. And what this finding represents is that the county did not have procedures in place to ensure that the balances within the fiduciary funds were reconciled both properly or timely as of year end. And what this would mainly deal with is activities that were moved to the general fund. So this was a new standard that was implemented by the county last year, GASB statement number 84. And so as part of that process, we did identify a $12.8 million past adjustment, and this past adjustment would represent unsubstantiated liabilities that were originally accounted for in the fiduciary funds. But when the county went through the process, they were unable to substantiate a majority of these balances or the full $12.8 million. And we also identified another past adjustment of $2.8 million to move cash within the cash with fiscal agents from the custodial fund to the general fund. And finally, we did have a $2 million adjustment that was actually recorded, which increased miscellaneous revenue and decreased liabilities within the general fund. So the effect of this would be without adequate reconciliations and procedures in place related to the year-end fiduciary activities, there is a greater risk of material errors not being detected.
Finding number 8, this is another repeat finding. It's related to off-ledger bank accounts, which are those accounts that are not included in the treasurer's pool. During our testing, it was identified that the off-ledger bank accounts were not reconciled to the general ledger as of year end, and there were reconciling items that could not be supported. Our recommendation is that a process be implemented to ensure that these accounts are fully reconciled and reconciled timely. Finding number 9 is a repeat finding. It's related to a journal entry identified during the audit related to delinquent tax collections. So during the year, bad checks were recorded as a reduction to interest revenue when the bad check was reversed, as opposed to reinstating the receivable, since that check was never cashed. This resulted in the year-end delinquent tax receivable and the interest revenue being understated by $1.9 million as of year-end. Our recommendation is that a process be put in place to ensure that the delinquent tax accounts are reviewed for accuracy during the year. Finding number 10, this is a repeat finding related to the undistributed tax fund. The county was able to reconcile the large amounts due to other governments. That was an issue in the prior year. However, it was identified during our audit that the fund as a whole had not been reconciled as of year end. So as of 9/30/22, there was not enough cash in this fund to cover the existing liabilities. Our recommendation is as a process be developed to ensure that the balances in this fund are reviewed and reconciled.
So those are our 10 financial statement findings. So before we move over and talk a little bit about the single audit, just from an overview standpoint, if we essentially carve out the first item where we're talking about specific entries, which actually might be as a result of what I'm about to say, is I think the main theme is just oversight and reconciliation. Developing a process, especially in the areas that we've identified in here, but really in all areas where they're more significant, is to ensure there's a change in the process to not only understand what's generating these transactions that are resulting in adjustments or needed reconciliations, but to ensure that we're digging down, or the county's digging down and specifically identifying what represents each of those account balances. So as Nick had indicated, we've seen some improvements in a couple areas. I think for them to continue to be on this list, it does represent that there's still needed improvement in each of those areas. So, if there's any, I know we're not really here to talk about what the resolution is, but if there's any clarification that's needed on any of the first 10 findings before we turn it over to Tara on the single audit, we'd be happy to try to address those.
Down into them. So, and there is, certainly some area for improvement. We appreciate the Auditor General, her staff, and our external auditors and their staff in doing this work to continue to put sunshine on the process of county government. And so, having said that, can I get a?
We still have the single. I'm sorry.
Go ahead.
We still got the single audit to cover. Thank you.
Is it on? There we go. Okay. So we do have the 4 findings over the federal programs. We'll start with number 11. I will just high level summarize all 4 of these findings over the federal programs are new findings. So we don't have any repeat findings this year. And they are all classified as material weaknesses and material non-compliance with laws and regulations. So starting with number 11, this finding related to the WIC Special Supplemental Nutrition Program. And what's required in this situation is any instance where the county has agreements or relationships with contractors that are performing some of the work under this program, there's a responsibility that management is reviewing the work or any decisions that are made by those contractors. So in this instance, controls in place were not adequate to ensure that the county maintained responsibility for compliance with eligibility standards when those eligibility determinations were made by the contractor. And so here, our recommendation is that the county implement processes in place to essentially perform reviews when contractor eligibility determinations are made. Finding number 12 relates to the health center cluster program. Again, this is not a repeat finding, this is a new finding. The requirement under the health center cluster is that grantees are required to apply a sliding fee scale that is to assist those individuals that are receiving benefits under the program where patients don't necessarily have the ability to pay. And so here, the county has a sliding fee discount policy in place based on income and family size. And that is implemented. However, it was not followed for all patients during the fiscal period under audit. And our recommendation here is just to ensure that those controls over implementing and applying that sliding fee scale are consistent for each of the program participants.
I'm going to cover finding 13. During our testing of the emergency rental assistance program, we identified out of a sample of 60 beneficiary samples that 6 of those payments were not calculated in accordance with the U.S. Treasury's guidance. 3 of the 6 payments not calculated correctly were due to partial payments previously made by the beneficiary that were not considered in the county's calculation. And for the other 3, adequate documentation was not maintained to support a portion of the payment that was made. These 6 items resulted in question costs of $21,529. Our recommendation is that the county review the controls in place over the calculation of benefit payments made under this program.
Nikki, could you explain what a question cost just is?
Yes, so question costs as part of our audit would be costs that have been incurred that may not be reasonable under the federal guidelines. It doesn't mean that the federal granting agency is going to collect those costs back, those that have been incurred, but as part of our audit procedures, we're questioning whether they are allowable under the grant.
And finally, finding 14 has to do with indirect costs that are charged to certain federal programs. In this situation, you'll see that there are 3 programs listed: Community Development Block Grant, the Home Investment Partnership Program, as well as the Child Support Enforcement or Title 4D funding. And the reason these 3 in particular were listed was because in this situation, the indirect costs identified were considered direct and material to these particular programs. And so the requirement here is that in situations where indirect costs are applied to or charged to a federal program, there is a requirement based on the nature of that indirect cost plan to submit that plan for approval by the cognizant agent. And so in this case, the county essentially uses the Health and Human Services via the state of Michigan as their cognizant agent. In this situation, there were costs applied to these 3 programs that were really not considered indirect or part of the indirect cost plan, and therefore were not submitted. So for approval, that is. So our recommendation here is to make sure that the plan itself is well documented, and then as required, that the indirect cost plan itself on an annual basis is really submitted for that cognizant agency approval.
Thanks, Tara. If we could go back to the PowerPoint, we've got a couple pages here as we wrap up our presentation we want to talk about. And we'll go back to the auditing standards on that and our requirements to consider fraud in the financial statement audit. So this is on page 18. There we go. What the standard does require is for us to think about fraud internally, and this is how we do it. So these 4 bullet points, while I won't necessarily read them out, during our internal planning meeting, we have these discussions. We have we do brainstorming. We take our knowledge not only from county operations, which we've done for a number of years, but also our experience in other governmental entities on where fraud could be perpetrated within the financial statement. On the next page, it also requires us, outside of our internal brainstorming, to have external inquiries, and external meaning outside of the team that you see before us here. So we do talk with management, make sure that we understand what their perception of fraud is, what their understanding is, if they're aware of any, if there's any mitigating factors related to that. And we ask them if they've got any specific concerns. We will document that and include that as part of our audit procedures. Finally, on the next page, it's just not one or two folks that we're talking to. You can see that, there's a number of individuals you talk to. Some of them are in this room today. But much like the pre-audit communication that Tyler and I alluded to earlier, this audit committee, as well as any member of the commission, is free to reach out to us during, before, after the audit process with any concerns that they may have regarding procedures that would impact the financial reporting and recording of the county's financial information. So with that, that's the end of our prepared comments related to the 9/30/2022 audits. And I will entertain questions, if any.
A lot at our next meeting. Ms. Cora has a comment or question.
From commissioners, I have a few comments I'd like to say. Our office is.
Let me jump on you for a quick second. Commissioner Dobb, can you make a comment or a question?
Yes, thank you, Mr. Chair. Do we have information in the report anywhere on the repeat findings? How many times it's been repeated?
I have a schedule that I prepared and we used last year. So when we have our meeting, our next meeting where we go through the findings, the schedule will list every year it's been repeated.
Okay, great. Thank you.
Our office is responsible for ensuring that the audit is completed timely, and it took a great team effort to make sure that we got it done on time. First, I wanted to thank Plant Moran for all their efforts in getting it completed. M&B had a small team because we know M&B is really short-staffed, but I wanted to thank Yogesh Kasani, Michael Bridges, and Shantika Bullard. They kind of took the lead on the M&B side to do what could be done to make sure that documentation was provided to the auditors as needed. Then we also had another team that was kind of facilitators trying to make sure whenever there was a need by somebody that the auditors needed some, we got involved to make sure everything was flowing through. And that was Mark Gabel, who was pretty good direct contact with the treasurer's office whenever there was problems at the treasurer's office. And then we had Darcel Brown and Eddie Fakori that assisted any way they could to make sure that everything was flowing as it needed. So I just wanted to thank everybody that was involved in that, because I don't think we could have got it done timely without all their help.
Mr. Chair, I wasn't sure, given your opening comments, how many questions to get into today. Would you, I have a couple of general questions, but some specific questions on some of the findings. Should the questions on the findings be at our next meeting?
For that to our Auditor General, but I'm thinking they probably will be. But Ms. Cora?
I would say if the question's related to what the auditee needs to do as far as corrective action, that would be at the next meeting. But if it's for a basic understanding maybe of the finding, it could be today. But if it's related to corrective action, it'd be the next meeting.
All of these repeat findings, and you said you had a schedule for year over year.
Yes.
Some of them are 3, 4.
Mm-hmm.
They would have all been in previous corrective action plans then, correct?
Yes.
So when it is, let's say, third year in a row on a finding, and we've had management response on all 3, and all 3 times it's like, yeah, we're going to take care of this, or however it's couched. How do auditors look at that then to say, well, wait a minute, this is what you told us last year. Now you're telling us the same story again this year. How do we handle that?
Getting a deep dive into this. Darcel, if you'd like to respond on behalf of management.
Good morning, Chairman and Commissioners. Darcel Brown, Legislative Liaison for the Wayne County Executive's Office. Well, one of the things, as you know, we have a new CFO and Deputy Chief Financial Officer, John Wallace and Robert Windigan. They could not be here today because they're at the GFOA conference, but they will be in attendance at the next meeting to address some of these concerns as well as the departmental concerns. I want to make sure that I take this information back to the directors of the department so we can have some answers there too as to what the corrective measures that will be taken to make sure that we're on course with what you all want to see.
And then Commissioner Kleen, did you have a question or comment?
Yeah, okay, I have the gist now. I have some questions I'll wait on for next time. But Mr. Chair, will we have, because some of these findings involved the treasurer, some involve the sheriff. So aside from management and budget here in the executive branch, will we have representatives from those departments to talk about their findings?
Yes.
Excellent.
I
Thank
think
you, Mr. Chair.
I think Dave Helisek did want to make a comment on your original question.
Yes, Commissioner Kleen. So part of what we're required to do as it relates to the prior year findings is document and communicating in writing the results of the prior year findings. So if they are repeat findings and actually a separate communication, we've got to indicate that, or if they've been resolved. So we actually address every finding. We will address every finding that's in this year's financial report as part of next year's audit. So we'll do, at the same time, yes, we absolutely take into consideration the history that we've been involved with the county and our underlying knowledge of, I'll say, the strengths and weaknesses of the system. But at the same time, every audit stands on its own. So we're almost starting the process all over again.
Questions or comments? Having said that, could I get a recommendation to pass this item for the day? Moved and supported. All those in favor? Opposed? There's nobody opposed. Okay. Next item, Madam Clerk.
F, such other matters as may be properly submitted before the committee.
Are none?
Public comments.
Is there anybody from the public who would like to comment? Ms. Cora?
Just trying to get this in earlier. I just wanted to wish you a happy birthday.
Comment. Aiden, you don't want to comment? I'm glad. Thank you. Joe, you don't want to comment either? Good. Mary, she's not saying nothing. Anybody from the public would like to comment? Yeah. Anybody from the public like to comment? Final time. Okay, next item, Madam Clerk.
Adjournment.
Can I get a motion? Been moved by Commissioner Kleen, supported by Commissioner Dobb. All those in favor? All those opposed? The ayes